Aloha, my name is Deep Suresta, and I'm a real estate agent, a veteran, and someone who's personally used VA loan and conventional loans multiple times and help clients weigh their options between VA and conventional financing. If you are wondering which loan is better for you, this video will help break down the pros, cons, and the key differences. Because let's be real, choosing the right loan can save you tens of thousands of dollars and make your entire home buying experience way smoother. VA loan is a benefit offered to those who've served active duty, veterans, and in some cases, surviving spouses. Here's what makes it powerful. Zero down payment. No private mortgage insurance, aka your PMI. Lower interest rate compared to many other loans. Easier to qualify due to flexible credit requirements and high debt to income ratio. And also super easy refinancing, also known as streamlining or VA ERL. Now, VA loan is meant for your primary residence, meaning you have to live in the house. But here's the part most people don't realize. You only need to live there for a reasonable amount of time, usually about 12 months. After that, you can move out, rent it out, and even use your VA loan again for another primary home if you still have entitlement left. Con, there is a funding fee, currently around 2.15% of the loan amount for first-time usage and 3.3% thereafter, which can be rolled into your loan. VA funding fee exemptions do apply to veterans with a 10% or more disability rating or a Purple Heart recipient even while active duty. And the home needs to be in decent condition to meet VA standard. No major safety issues or major fixer-uppers. A conventional loan is open to the general population and isn't backed by the government. It usually requires a down payment, somewhere between 3 to 20%. And if you put down less than 20%, you will probably pay private mortgage insurance. Now, there is no funding fee and it can be used for primary homes, secondary home, or investment properties. But lenders usually want to see a higher credit score, a lower debt to income ratio compared to the VA loans. Refinance requires a whole new application and qualification for a new loan. Here's a quick breakdown to help you compare. VA loans offer zero down, no private mortgage insurance, and more flexible credit requirements. But they have a funding fee and can only be used for your main home, at least at first. Conventional loans usually require at least 3 to 5% down. If you put down less than 20%, you'll pay private mortgage insurance. There is no funding fee, and you can use them for second homes or rentals as long as you meet the down payment and occupancy requirement. If you qualify for a VA loan and want to save upfront, it's usually the better option. But if you are putting more money down or buying something unique, conventional might make more sense. Also keep in mind the amount of time you plan on holding this property. VA funding fee can take a long time to pay off or recoup. With conventional, there is no funding fee added to the loan. With VA refinance, there is a 0.5% funding fee with every refinance unless you're exempt. First-time buyer with little savings, VA loan is likely the best option. Now, high-income buyer with 20% down, conventional might give you more flexibility. Buying a multi-unit or investment, VA works if you live in one unit, otherwise go conventional. Now, buying in Hawaii, competitive market, some sellers prefer conventional. A good agent like me can help you present a strong VA offer too. Share a quick story from my own personal experience. When I bought my first home, I had no money for down payment. $0. So I used my VA loan, bought my house. It was a brand new house, didn't need any repairs because I didn't have any money for repairs. After I closed on my first home, stayed there for about a year. After that, I bought my second home. In Mililani, I found a nice fixer-upper. It was very competitive. I was competing with 4 offers. For that one, we used conventional because we had some savings, enough for some down payment and fixing up. And another reason was we were not sure if the townhouse qualifies for a VA loan because of its condition. It was a fixer-upper, number one. Number two is the competitiveness. It was a couple of years ago. When the market is competitive, most agents or most sellers, they look for how much money the buyer have for down payment. Is it a strong buyer? So I had to present my best foot forward, use a conventional loan with a big down payment, and that's how I was able to score it. It just shows that there is no one-size-fits-all answer. The best loan is the one that fits you you and for that property. When comparing VA and conventional loans, there are a few things to look out for that can make a big difference in the long run. Here are some key points to keep in mind. Thinking VA is always the best option. Skipping pre-approval. Choosing the wrong lender. Only looking at monthly payments. Not considering potential future plans or thinking long-term. If you're not sure which loan is right for you, here's how to figure it out. Check your VA loan eligibility. Compare both options side by side. Talk to someone who's done this before. I've helped a lot of military families and first-time buyers figure this out, and I would love to help you too. Follow me for more tips, and mahalo for watching.